So here we are today, uh, and the stock market crash that's going on right now is it began on they kind of pin it on March 9th. That's when the first big drop started happening, March 9th of 2020. Now we can first compare this. I'll bring up a picture. We can first compare this to 2008. Uh, I In 2008, I was still working at a bank, and we had these great big screens all around the room, and so we're all standing there with our headsets on, tied in, talking to customers, watching as it just boom, 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 dropped 777 points, which at that time was massive based on the size of the Dow at that time. But let me show you here some of the data. I just compiled some of this so we can take a look at it. So you can see first a comparison between 2020 and what happened in 2008. The Dow Jones and the S&P Standard & Poor had peaked on October 9th of 2007. You can see the Dow at that time was just over 14,000. And then the following day is when the NASDAQ peaked. The difference between the three, the Dow is the top 30 companies over a spectrum of industries. So you've got kind of a broad look, but it's just the 30 among the biggest companies. Honestly, a better look at the U.S. economy is the S&P. The S&P is an index of the top 500 of the biggest companies in the country over a big spectrum. And so rather than just looking at the Walmarts and Amazons, or 3M, some of these big ones on the Dow, the S&P gives us a much broader look. And then you have the NASDAQ. NASDAQ is primarily tech stocks, tech-related stock market. So you can see here in 2007, these are the peaks. The bear market retroactively, they pin it at June 27th as the start of the bear market. We had been in a bull market for roughly 2001 until 2007. Then we have on November 4th, 2008, the 2008 election. But it was on September 29th of 2008. That is when we had the big crash. Dow Jones dropped 777 points in intraday trading. Up until this crash we just had this week, this crash on September 29th was the biggest crash in U.S. history, aside from the 87 crash. So this continues, and it finally bottoms out on March 9th of 2009. That's when the stock market had reached its lowest point before it started to come back up permanently. So when we look at it here, by the end, so if we go from October 9th, 2007, until it bottomed out March 9th, 2009, you can see that it averages out to 55% is how much the stock market dropped during that time, a 55% decline. So it was significant. It was very significant. Now, looking at how things are today, we are going to surpass that easily. We're going to pass that. The Great Depression was a drop of 89% in the stock market. Again, a cumulative total between roughly 29 to 31. All right. So we have seen huge drops this week and last week. The 55% drop is nothing. I mean, we're going to hit that easily by the time it's over. So what I want to do is this. I would like to play, it is a 20-minute video. I'll sit here and watch it with you, about the Great Depression and and kind of what bearing it may have on what's going on today. This is a little educational video. Yeah, Squirrel and Wesson, thanks for the donation, brother. He says, I'm still awake to catch this. My 401k sure dropped severely the last 2 weeks. I've never been hit so hard in my short life, but it'll recover eventually, I guess, until the next crisis. Thank you, Squirrel and Wesson. It's very kind of you to donate a super chat donation to me, even in the current chaotic atmosphere. And thank you also, Flick Off, earlier for that, and Lawyer for the People, for your donations. I'll recognize everybody at the end. So I'm going to go over here and bring up this video and play it, and the stock market crash video. And I would like to encourage you to continue to drop a $5 super chat donation in there, and then when we're done, I'll go through those and we'll pick out a winner. All right. And I'll be sitting here watching the comments with you guys. So let me cue this up. This was in April of 2018 is when I made this video originally. One thing that we can do to better understand our current economic situation is to look back at a time period in American history that was very similar to what we have seen over the last decade or so. And to do that, we need to go back to the 1920s and look at the great stock market crash of Wall Street that happened in 1929, also called Black Tuesday. This happened on October 29th, 1929. This was the key factor in the beginning of the Great Depression, which was a global depression. It happened all over the world as markets came tumbling down. World War I had ended, and this new era in the United States had been born. This was an era of enthusiasm, confidence, optimism, a time when things were changing in society. 19th century morals were being set aside, and we can see that evidenced in the rise of this new class of women, this new model for what the American woman should be like. They were called the flappers. You've probably heard of the flappers. This was a time when inventions such as the mighty airplane and the miraculous radio were it just contributed to this atmosphere where anything seemed possible. And so we have growth in investment in the stock market. We have this big boom that happened toward the end of the 20s. The stock market has a reputation of being a mystery even today. But back then, in the early 20s, it was especially looked at as something that only the most professional among people engaged in, primarily the bankers. And without going into detail, the bankers came up with some new schemes that made it possible for the common man to feel more comfortable in betting his money in the stock market without, all the risks. So as more and more people began investing in the stock market, the prices began to rise. And this was first really noticeable in 1925. Stock prices at that point started bobbing up and down. If you look back at the charts, you can begin to see volatility between 1925 and 26. But then when we get to 1927, there's this strong upward trend where the bull market, a bull market is just when prices are rising in the stock market. Bear market is when they're going down. This bull market, rapid ascent it enticed even more people to invest. And so by 1928, we have this boom going on. Everybody wanted to have their hand in the stock market. The common man had really gotten into trading stocks and bonds. So the stock market boom changed the way that investors viewed the stock market. It wasn't any longer just for long-term investments. You know, you put some money in and you retire on it after a period of decades when you finish working. By 1928, the stock market had become a place where an everyday person could get rich quick, or at least that's what it seemed to be. That's how people saw it. Interest in the stock market had reached a fever pitch. Everyone was talking about it. You go to the barber shop, they were talking about stocks. Go to parties. The socialites are talking about the stocks and what they're investing in. We had maids and teachers were out there. Chauffeurs were the normal people that are not normally associated with the idea of stock investments. All of these common people are participating in some way, anticipating making millions off the stock market. But the problem was that not everyone had the money to buy the stocks. In fact, most people didn't have the money that it took to buy everything. So Wall Street came up with this dirty little trick, this new concept of buying on margin. Basically, when someone didn't have the money to pay the full price of the stocks, they could buy it on margin. And that means basically that the buyer would put down a little bit of his own money, and the rest of it, the stockbroker would come in and lend to them. Of course, at interest, but still, you could put down in the 20s, you could put down about 10% of your own money on a stock, borrow the other 90%, and in the end make money. But it was also a very risky practice. If the price of the stock fell lower than the original loan amount, then what the broker would do is issue a margin call. And that just means that the buyer has to come up with the cash quick to pay back his loan immediately. In the 20s, we had speculators who were doing this, practicing buying on margin. A large number of, large percentage even of the people investing in the stock market were doing this on margin. They were confident because they could see this upward trend that was especially taking off since 1927, and since there had never before been like a great massive stock crash up until this time, they didn't have the kind of fear that some people have today, because we know that a big crash is possible, right? So by early 1929, people across the U.S. were just pushing to get into the stock market. Profits seemed pretty much assured. Even many companies were putting money into the stock market. And what was maybe the worst of all of it was that the banks themselves were taking people's money, just, regular bank deposits. They were taking people's bank deposits and investing it without their knowledge in the stock market. So with the stock market prices going upward, everything seemed fine. But when the great crash hit in October, it just wiped them all out. But there were some warning signs that they didn't pay attention to, kind of like people are not paying attention to warning signs today, which is just ridiculous since we do have the 1920s to look at as a model. But on March 25th of 1929, there was this mini crash. The stock market had a sudden drop and panic ensued. Margin calls were issued. This was a prelude of what was getting ready to happen just a couple of days later. What stopped this from being the big crash, what stopped this from straightening people out, is there was this banker named Charles Mitchell who came along and said that his bank wasn't worried, everything's fine, don't worry, this is just how things go, his bank is going to keep lending. And he used this tactic to reassure everyone that everything was fine. We see this happen today, right? So those people who should have seen this sudden drop on March 25th, they should have gotten out then, but a lot of people didn't because they felt reassured by the banks. Well, by the spring of 1929, if we were to look at it, there were additional signs that the economy was headed for a serious setback. The steel production, for example, was way down. House construction was slowing. Car sales were waning. If we look today at some of the same things, signs in the economy of things slowing and stopping, we've got major production problem here in the U.S. that should be telling everybody that the crash is kind of imminent. Another one. Just like back then, people today they listen to the few, they don't listen to the few reputable people that are out there. And they listen to these bankers saying, no, just keep investing. But some people know that a big crash is coming. So back then, they hear this warning that a crash is coming from a small number of people, but they weren't listening to those. They didn't want to listen to the people that were full of doom and gloom. They say, you have no way of knowing what's coming. So the economists back then that were warning about this coming crash, they just had to accept this mantle of being a pessimist. Really, one of the things that made people ignore these warnings was this big boom that happened in the summer of 29, prior to this happened after the mini crash, but before the big crash in October. If you look at June through August, stock market prices reached the highest they had ever been. Kind of like today, prices at record levels. And so this upward trend looks like it's going to be inevitable. So on the 3rd of September of that year, 29, the stock market reached a peak with the Dow Jones Industrial Average hitting 381. That was the peak, 381. Here we are at like 26,000 is the peak. 381 doesn't sound like a lot, but still. At first, there was no big drop, but then a couple of days later, the stock prices started bobbing up and down until what we call Black Thursday. Black Thursday is that mini crash that happened on October 24th. Stock prices plummeted in the morning. Ton of people selling their stocks, margin calls going out. People across the country were watching these ticker tapes, because they had these machines back then that would feed out these live ticker tapes, and people just panicked. The ticker was so overwhelmed that it fell behind. You can look up on the internet and see pictures of like thousands of people gathered outside the New York Stock Exchange on Wall Street, and they're just dumbfounded. There's this atmosphere of fear and uncertainty, and people wanted to know what was really going on. We had, there were rumors going around that people were committing suicide, and in fact, some people did commit suicide. But by the afternoon of October 24th, the panic had pretty much subsided. The bankers pooled their money together, invested a lot back to try and prop it up. People thought, we made it through this, right? But then we have October 29th, which is just 4 or 5 days later. We've got this big crash. The low numbers on the ticker from the 24th, it had shocked a lot of the speculators. And even though they had been temporarily reassured by the banks that had propped it up for a few more days, the truth is that everybody was spooked. They knew that it was time to get out of the market. The problem was everybody got out at the same time. Stock prices plummeted. And this time nobody was able to step in to save it. We didn't have Mitchell coming in, giving reassuring words. We didn't have the banks getting together, reassuring the people. And so on the 29th, 1929, we have what is called Black Tuesday. Huge, huge decline. The biggest in history, except for 87, but the ticker fell behind The people did everything manually, not by like we do today with computers, and they just couldn't keep up with it. They couldn't get rid of their stocks fast enough. And because nobody was buying in this atmosphere, stocks were selling them, nobody was buying, and so everything just collapsed. Total collapse. Over roughly 16.5 million shares of stock were sold, which was a new record at that time. But they still didn't know what to do about all this. So they made this decision to just close the stock market on Friday, November 1st, for a couple of days. They figured the best thing to do is to stop this downward trend is just to shut it down. And that did help, but then when it reopened on November 4th, within just a few hours, stocks started dropping again. And that continued through November of 1929. That's when things seemed to stabilize. But even though it stabilized some, that wasn't the end of the trend. Over the next couple of years, the stock market continued to drop. And so by July of 1932, the stock market had gone from 381, the Dow Jones, from 381 down to 41 was the average closing there. So, needless to say, this devastated the entire U.S. economy. There were mass suicides. People were ruined. Because remember, most everyone who was engaging in this stock speculation, they did it on margin. They didn't have the money. So they put 10% of their money in. When the stocks crashed, they still owed the full 100% to the lenders, to the bankers. So we can look back and see everything that happened that led up to the stock market crash of 1929 and compare that. In fact, if you look at the photos out there, the overlay of what led up to the crash of 29 with what's been happening here in the last handful of years, especially since 2007, you can see this trend is almost exactly the same. It's frightening. And we are at that point in the charts from 1929. We're now at that point where if we continue to follow the trend, we are going to have a great big crash. If the cycle repeats itself, it is coming. I guarantee you, a major crash is coming at some point. I can't say when, but when that crash happens, we are going to see a complete paradigm shift in the United States of America and around the world, because we're going to bring the whole world's economy crashing down with us, just like happened back during the Great Depression. Everything is going to change. There's going to be a massive, unprecedented increase in government control over people's lives, because people are going to turn to the government for help. The problem is the government is broke, absolutely bankrupt, and the only way that the government can give to us is one of two ways. One, through taxation, where they get money from the people, or two, the government borrows money from a lender itself, which is already happening, the Federal Reserve. The interest on the national debt is so high that if you added up every penny of the income tax that is brought into the coffers of the IRS, into the U.S. Treasury, the money that we pay is not going to pay, it's not going to pay food stamps, Medicaid, nothing like that. The money that we are paying in taxes, it's not going to pay for infrastructure, public education. It's not paying all of these bailouts, because we're still sending money to other countries to bail them out. The money is not going to take care of our national security by keeping our defense strong. Those things are happening, but it's not a result of our income tax. Our taxes altogether, when you add them all up, are barely paying the interest on the debt that we owe as a nation. We can barely make our interest payment. So Where's all the money coming from? Well, the Federal Reserve is printing it. The Federal Reserve is putting the nation deeper and deeper and deeper into debt because the politicians will not cut spending. And they won't cut spending because they know that, well, first of all, they're not going to win re-election if they cut pet programs. But second, these people are dumb, but they're not that dumb. They know that there is no fixable solution to our economic situation. It can't be done. It can't be fixed. There is nothing that can stop the unraveling of the U.S. economy. We are now at a point that we have to pay the price for the decades and decades of insane borrowing. This is like a margin call. That's what this is. We are operating on putting in our 10% into the economy as taxpayers, and the other 90% is borrowed money from the Federal Reserve. When we cannot pay the interest anymore on the Federal Reserve's debt, we will collapse, and because that is going to lead to incredible chaos for us to continue functioning, we will have no choice but to ask for help from the International Monetary Fund and the World Bank, the IMF and the World Bank. But I'll save the discussion of that for another video. So that's going to be it for this video. I hope you have found it helpful. Of course, it does sound like doom and gloom, but it's reality. And we'll continue to talk about this. I don't want you to think that my position is that we are like, that it's imminent, that right now, that in the coming months, we're going to go through this big collapse. That's not what I'm saying. It could be years off, but it is coming. So when I see it, like what we're seeing in the news today with the volatility of the stock market, knowing what I do about historically what happened and the way we're set up for the future, when I see the kind of volatility, it causes me at least to raise my eyebrows and think, could this be it? Is this the precursor to what is getting ready to happen? Maybe so, maybe not. More times than not, when I have seen these things happen, it turns out to be a correction more than anything else. So rather than a crash. So anyway, I just thought that giving you a little bit of history here on the stock market crash of 1929 might be helpful, might be educational, help you to see how it was, so you can compare the conditions back then to how they are now. And mostly, I guess I did this video just for educational purposes, but I also have the hope that you will use it to shore up your own finances, to get into the best financial position that you can. Money is going to be a problem for us if the economy eventually collapses. You need to have things that you can rely on. You can't rely on the US dollar. The petrodollar, the days of the petrodollar are coming to an end. The petro yuan is on ascent. The trade war that's going on, the tariffs and the trade war, there were tariffs that were put on back during that time period, back in the 20s, that really exacerbated the problem. Maybe it was in the 30s. I'll have to go back and look it up. I don't remember for sure, but it only made matters worse. And I'll tell you what, it's time to get our houses in order. That's my message. Time to get our houses in order. Do the best you can. If you're able to get out of debt, get out of debt. If you're able to set some money aside, do that. But regardless of things like food storage, water storage, having heating, cooking, non-electric things to care for yourself and your family at home, setting all that aside, in the end, my personal belief is the most important thing that any of us can be doing is learning how to gain revelation from God. Because in a crisis, in a situation, whether you want to call God by whatever name, Great Spirit even, there is some kind of power that comes to the hearts and minds of men and women that is called revelation. It is a spiritual guidance and influence from something, some power or some knowledge that is beyond the veil. Even people that are not, say, Christian, for example, people that are maybe, what's the word? I can't remember. The people that are a little bit, spacey, spiritual and into spiritual things, but even they acknowledge that we do get some kind of divine guidance. So I'm not in this video here to preach to you about what constitutes God. I have my beliefs, and I'm sure you have yours. But the reality is we can get a measure of guidance, especially in times of difficulty, if we have a connection to that source, if there are open lines of communication. And my belief is that what puts us in tune with God is righteous living, being kind to people, being forgiving of others, not holding grudges, not being mean-spirited, even in social media, not saying mean, rude, awful things to people, being kind to our neighbors, being kind to strangers, holding the door for people, smiling, giving people compliments. Doing good in the world, I think, helps us to become more like the nature of our Creator. And because of that, when we become in alignment with that, you can call it kind of like a vibrational wave even. If you have a vibrational wave, if you can get in sync with that, and create like a harmony, for example, then that is going to be a bigger help to you than anything else. Because when the time comes, if there is a big collapse at some point, what is going to help us more than anything else is getting divine guidance. Because regardless of what kind of hellstorm is raging around us, if that still small voice can give us peace and give us guidance through troubled times, that is worth more than all the gold in the world. So that's my suggestion. That's my counsel to you guys. Well, that's going to be it for this episode. For Blackstone Intelligence, I'm Jake Morphonios. All right. So those were some of the thoughts that I had back then. You could feel it coming, you could see it, you could look at the markers, you could look at all of the evidences out there that we're getting closer to a big economic reset. And so that's why I was telling people, build up your food storage, set food aside. Every time you go to the grocery store, get a little extra, extra cans. Don't go crazy with it, but build some up and get ready, because when this happens, when these things happen, it is so quick that it catches people off guard, and you always end up with panic buying, which is what we're seeing. That's why people can't find, forget gold. This is worth gold right now. It happens fast, and that's why preparation is the key. Being ready in advance is much better than trying to figure it out on the fly.
If you appreciate hard-hitting investigative journalism that you won't get from the mainstream media, then please support Jake's research and analysis at patreon.com/endtimes news report, paypal.me/endtimes news report, or send a check or money order to Jake Morphonios, P.O. Box 1333, Kernersville, North Carolina 27285.